Are we heading towards a recession? It depends on who you ask, but if you ask most stock investors, they'll tell you it looks like a recession opened up a can of whoop-ass on their portfolio. The good news is inflation cooled to 8.3% from March's 40-year high of 8.5%, but that was hotter than expected, and yesterday was another brutal day on the markets. The bad news is inflation is going to wreak havoc on the markets for the foreseeable future, so we need to be prepared for a bear market. So today, we're going to cover inverse ETFs. An inverse ETF is simply an ETF that is constructed to profit when the markets go down, and there are two main types. There's leveraged and non-leveraged ETFs. If the inverse ETF is leveraged, that means it has a higher risk and reward, and new investors might want to focus on non-leveraged ETFs, and I will cover both types today. And if we hit a full-blown recession and the stock market keeps heading down, these inverse ETFs will become your best friend and allow you to make money while most investors take a beating. And if we hit a full-blown recession and the stock market keeps heading down, these inverse ETFs will become your best friend and allow you to make money while most investors take a beating. I work hard to provide no-fluff videos packed with real data to help you invest better, and all I ask is that you hit the like button to help get this video over 700 likes. Please take 1 second now and give it a thumbs up. Thanks a lot, I really appreciate it. Let's kick off today by going over a few of our winning trades from Discord. We're now in my Discord. You can see a lot of channels on our left here, and we're looking at our winning trades from yesterday. We've got Beach Bums on Ford. They ripped a 63% profit, and we've got Mesa, another 65% profit. GERD, they closed an Oxy call with a 50% profit, and this was an earnings report play for 2 days. Unfortunately, only bought one, but $150 is better than nothing. Very true. We've got Vinay, closed a few contracts today on the 5/20 expiration date. VTNR, 27% gain. That was one of our recent trade alerts. We've got MTCH, a 13% gain, and Hood was a break even. And then on the 5/27 expiration, LCID with a 105% gain. And this is an important part. I have also had my fair share of losses to go along with these gains. Obviously, my gains outweigh the losses by a big margin, so it's all part of the process. I felt it's important to share this as we're not creating any false impressions in this group that all our trades are just winning trades. You can find my losses here and my analysis of why these trades fail, which I feel is also very important to study and get better as traders. And then there's two different links here, and this is what we do inside of my Discord. And then we've got one more, SUJ. They closed PayPal for a 13% gain. My Discord is all about helping people make money, and if you want all of our live trading alerts on stocks, options, and crypto, then come join our community. It's a tremendous value, and you see the results we're getting every day. All right, now it's time to grab a huge cup of coffee and hang on, because this is not your normal stock channel. Today we're going to go over my favorite inverse ETFs, and I really encourage you to add these to a watch list because they are great for bear markets. And the one big benefit of inverse ETFs is we can buy and sell them just like a stock, which makes them easy to invest with. And for more aggressive investors, options are available with these inverse ETFs as well. Let's go over my inverse ETF rules. Number one, inverse ETFs are short-term investments or hedges. Number two, we want to get in, get out, and get paid. Number three, understand leverage before you start playing with the 2 or 3x leveraged ETFs. Number four, don't get hung up on the expense ratios. When a lot of people talk about ETFs, they go straight to the expense ratios. Since this is a short-term trade, that is such a small portion, it really doesn't matter for what we're doing on inverse ETFs. And number five, don't be greedy, especially on leveraged ETFs. Now, a few important points. Inverse ETFs aren't designed to be held overnight. They were originally intended as an intraday trade, but, and this is a real big but, if you decide to hold a position in an inverse ETF for longer than 1 day, at a minimum, you should monitor your holdings daily. You must realize if you hold an inverse ETF over multiple trading sessions, one reversal day can wipe out your gains. So I do hold these for multiple trading sessions, but I follow these rules. When should you buy an inverse ETF? There's actually a couple of different strategies we can use. Investors have various strategies for inverse ETFs. Some use inverse ETFs to hedge against falling prices in other positions. So as one position drops, the other rises, capping the potential losses. Other traders may simply use inverse ETFs to make a directional bet on a security or index. And fund performance. This is a big one. The numbers don't lie. While doing your research, take a look at the fund's daily performance. Just remember, these funds are not intended as a long-term buy and hold strategy. And at the end of this video, I'll go through some of the different charts on these inverse ETFs. First one that we want to cover is the ProShares Short SP 500. Its ticker is SH, and they provide an inverse exposure to a market cap-weighted index of 500 large and mid-cap U.S. firms firms selected by the S&P 500 Index Committee. For our performance over 1 month, we can see they're up 11.4%, 3 months 12.58%. Their leverage factor, they are a 1x leverage factor, so this is not a leveraged ETF, it's a 1-to-1 ratio. The expense ratio, I'm just going to mention this so people can see it, it's 0.9%. Our average daily volume on this is $567.85 million, so quite a bit of volume on this one. We've got competing ETFs, and I'm going to list these today, so this gives you more different ETFs that you can go and research on your own. And then I consider this one to be best for beginners, and I really encourage you to start with either a 1x or a 1.5 leveraged inverse ETF. So here's the SH on the chart. It is compared against the S&P 500, and what I want to point out is our indicators work the same on this as they do on any other stock. So red on red, we're dead. Green on green is a good time to buy, and we've got numerous different buy signals, and it's comparing it to the S&P 500. So let me add a comparison line for you guys. Just have to come down here. I've already got it set up. Comparison line. We're going to show the study, and this is going to give us a purple line that shows us the S&P 500. So here you can see this inverse goes up when the S&P 500 is going down, and that's a great visual representation for it. Our second one is the Tuttle Capital Short Innovation ETF, and its ticker symbol is SARK. Poking a little bit of fun at Kathy Woods, I'm sure. And SARK is an actively managed fund that seeks to achieve a negative 1x the return for a single day of the ARK Innovation ETF, ARKK, through swap agreements with major local financial institutions. And they were up huge yesterday. In 1 month, they're up 39.98%, 3 months, 60.4%, and year to date, they're up 88.56%. This is a relatively new ETF. That's why we don't have more stats on them. And in this current market, they are absolutely crushing it. Their leverage factor is 1x. Their expense ratio is 0.75. Their average daily volume is 177 million, so a little bit on the thinner side. And then a lot of people will compare them to these different ETFs right here, SPXS, TZA, SPDN, SOXS, and CHAD. And I consider this to be another one that's good for beginners, and this is one that I like in the current market. For SARK, we can see the same thing. It goes up when the S&P 500 is going down. We had a couple of really good buy signals right here to get in, and then we also had the J5 multiple times along the way, and the S&P has been dropping like a rock. And if you do want to grab my indicators or this TOS bar, the link for that is in the description below. Next up, we've got the UVXY ProShares Ultra VIX Short-Term Futures ETF, and UVXY provides 1.5x leveraged exposure to an index comprising first and second month VIX futures positions with a weighted average maturity of 1 month. What all this means is it's playing the VIX Volatility Index, and this is definitely one of our shortest term ones that we want to trade because the VIX trades in a range. So our leverage factor is going to be 1.5x. We can see over 1 month it's actually up 48.78%, over 3 months 57%, and year to date 56%. Our expense ratio is 0.95%. Our average daily volume $1.17 billion, so this one trades quite a few shares, and it doesn't have any competing ETFs, and it's best for anyone just as long as you realize it's very short term. For the UVXY, I really want to stress this is a short term trade only because this is based on the VIX Volatility Index, not the S&P 500 right here, and it's going to range trade between a low of about 10 right here and a high up here of about 26 right now. So this is very short term, only a couple of days, generally speaking, at the most. Number 4 is the TBT ProShares Ultra Short 20-Year Treasury, and TBT provides 2x inverse exposure reset daily to a market valuated index that tracks the performance of U.S. Treasury securities with remaining maturities greater than 20 years. So this is a great one to play if you think the interest rates are going up. In 1 month, it's up 17.4%. Over 3 months, it's up 40.06%. Our leverage factor is 2x. Expense ratio 0.92%. The average daily volume is 183.11 million, and it does have a few competing ETFs being TBF, TNV, and TTT. For the TBT, we've got the same thing here. It's been trending up very nice. Yesterday was a really big down day, and I actually have an open position on this, so that took me negative on this one, and that's the risk you run of holding these for multiple days, I am confident that this one should be coming back, so I'm still holding. Number 5 is the SDS ProShares Ultra Short S&P 500. SDS provides 2x inverse exposure to a market cap weighted index of 500 large and mid-cap U.S. firms selected by the S&P committee. Our leverage factor is 2x. In 1 month, they're up 23.4%, 3 months 25.21%, and year-to-date 33.26%. Their expense ratio is 0.91. The average daily volume is 524.65 million. And then you can see we've got competing ETFs, SH, SPXU, SPXS, and SPDN. And remember, SH was our first one, and let's take a look at that. And here we can see their 1 month returns, 11, 12, and 16. And this is half the returns of the SDS, and that's the difference of the 1x leverage or the 2x leverage. Hopefully that makes sense. So once you've mastered the SH and you want to take on more risk and reward, then you can step it up and try the SDS, which is a 2x leverage on the S&P 500. For SDS, it's against the S&P 500, so just like all of the other ones, it's going to look very similar. The S&P goes down, it goes up. Red on red, we're dead, but it's an inverse, so red on red is actually when we want to be in the S&P 500 and our major indexes, so you can just see it's a simple inverse relationship. Number 6 is the TZA Direction, and hopefully I pronounced that right. Daily small cap bear 3x shares, and TZA offers 3x daily inverse exposure to the US small cap companies as defined by the Russell 2000. Here we can see their performance. In 1 month, they're up 37.35%, 3 months 44.89%, year to date 72%. And I'm really stressing how much they're up because we've been in a very rough market, bearish if you will, and in a bearish market, these profits are going to be very, very nice. In a bullish market, you will get absolutely killed. So you've got to make sure you've got your direction right. The leverage factor here is 3x. The expense ratio is 1%. The average daily volume is 392.85 million. And it does have some competing ETFs that you can compare it with: RWM, SBB, SDD, SRTY, and TWM. All right, the TZA, it's measured against the Russell 2000, and right now we are showing the S&P 500, so we can just double click that, and then we can come over here and we can change this to the RUT, which is the Russell 2000. Hit that, apply, okay, and now it's going to be comparing it against the Russell 2000. Same relationship, it's an inverse. The Russell 2000 goes down, it goes up. And lucky number 7 today is the SQQQ ProShares Ultra Pro Short of the QQQ, and the SQQ is an aggressive take on the large cap space, providing geared inverse negative 3x exposure to the NASDAQ 100 index, an index of 100 tech heavy firms listed on the NASDAQ that excludes the financials. And this is where the big boys play and the big money. So make sure you're ready for this before you jump in. Our leverage here is 3x. The expense ratio is 0.95%. The average daily volume, 4.21 billion. And I've got money here because this is where the money plays and it goes. It's very liquid, so it can be a great place to go, and you'll get good fills because of that liquidity. Competing ETFs are the PSQ, the QID, the SH, SPXU, and SDS. And our final chart on the day is the SQQQ, and I really want to stress this is a 3x leveraged ETF, so you definitely want to be ready for this and have a little experience before you jump into it, because the gains or losses can happen very fast. And the other thing I want to point out is these indicators. I mean, check it out, green on green, and boom, it shoots up. Same thing over here, we've got green on green and it's heading up. And anytime you see red on red, man, that's a time to get out. I really hope that today's video has been helpful in showing you how to make profits in a bear market. If it has, be sure to subscribe, and if you want to receive all of my trade alerts, join our Discord community. You can also find all of my videos and stock indicators at jerryromine.com. Peace, and I'll see you on the next video.